Hi guys, are you interested to make profit consistently with gold with just simple ICT strategy that I've been using for past 3 months, making consistent profit? Stick around. So this strategy is called Model X 2.0. But don't get confused about the name. You know what I do here? I simplify all those big words they use in teaching trading strategies. So before we start, I want you to know that this strategy is time-based model. Our focus will be only on 10 o'clock a.m. to 11 o'clock EST silver bullet time. This is not silver bullet strategy. So if you want to change your time, go to your trading view, then on the time zone, change it to New York for you not to make mistake. So how do we trade this Model X? I will put ICT here because it's not my strategy. Everything I'm saying here is what ICT taught concerning the strategy. So let me put him. He said that the characteristics of London Q zone is continuation of the trend in the time window. We will see 1 hour candle open high low close or open low high close as our pair buy. So this is simple. I will simplify everything. Don't get confused. This is just the summary of the whole strategy. So bear it in mind that this is the explanation of the Model X. So this sounds like logic. Many of you will say that I don't think I can do this. Just stick around. Everything will be simplified. To make this simple, so our focus will be on London high or London low swept, anyone available at that point in time. Secondly, previous daily low or previous daily high sweep, sell stops or buy stop rate, SMTP divergence with correlated pairs. Want to do additional modification, you can use SMTP divergence with correlated pairs. You know what I mean by that. Then market structure shift, that's where our focus will be. Then our entry metric, that is PDR metrics, which is entry model. We use Reka block plus LVG, swing failures, which is double sweep pattern. These are the entry model I use. So if you have any other entry model, just make sure you understand the Model X summary. That is the characteristics of what it says. Then you can use any entry model. Or when I give an example, you will understand it better. So now let's go to the illustrative diagram for you to see. So here is the schematic diagram of this Model X. Let me explain before moving to live example. But before we start, let's repeat the statement we're about to represent in diagram. What does the statement say? The Model X is said, as I'm putting ICT here, he said that the characteristics of London close Q zone is the continuation of a trend in the time window. We will see 1 hour candle open high close or open low high close as per our bars. So this is simple. So remember, on daily basis, market open in the midnight, which is opening of the day, we call a shell section. So this is midnight open, and after that midnight open, normally price will never be in a range forever. It will find its way out when volumes start to come. As volume come in, we have a breakout. The breakout leads to opening of the London section. So now we have London section low. This is London section low. Why do we call it a low? Because as the market breaks out from the midnight open, it doesn't continue. It does what? It pushes back inside the range, which which the power of trade call manipulation. So as we are in London section, when volume come in, we start seeing highs and low. We have a high here. This is high and this is low. So now this is London low and this is London high. We need to mark it out because it's our interest zone. Remember, we mentioned it's those right up. So let me show you. To make it simple, this is where our focus will be. London high or low swept, previous daily low or previous daily high swept, sell stop or buy stop rate, SMTP divergence with correlated pairs or market structure shift. So, but our interest now is to define the trend because we are looking for continuation when New York sections open. So now we have defined the trend. We know that London section is in uptrend. So here is overall opening of the day, which is, this is buy side liquidity. I hope this is clear. Managed to understand. So as we're in uptrend in London section, we are waiting for 10 o'clock a.m. to arrive. We are waiting for the time, which is our time window we trade. For those of you who trade New York section, this works based on gold. Remember, time frame I'm using is 5 minutes time frame. So for those of you who your time zone is in other zone, try to change it to New York. Now we have reached 10 o'clock a.m., what will I do here? That's when you get involved because you have known your trend. London section is trending up. How do we approach this trade? Remember our entry model. Our PDRA metrics is breaker plus FVG and the swing failure or double sweep pattern. So breaker plus FVG is where you get involved. So we need to see as the London section is in uptrend. As we approach 10 o'clock a.m., we need a breaker when market take up this high. Let's assume market take up this high before we enter into New York section kill zone. Then we need to see at least a fair value gap. That is breaker plus FVG we mean. That FVG represents the volume, the market. That's the aggressiveness of the buyers. We have more aggressors who are willing to buy anywhere the price is. That's what the FVG represents, that gap. So now, let's assume we have FVG here, somewhere around here. So this is the breaker, and this is FVG. Where do you get involved? You may get involved inside this FVG, or you may get involved at the high of this London high. It depends. If you don't want to miss out, you can get involved at this high. It doesn't end there. So let me flip this chart for you to see how it is in what? In downtrend. So the same thing applicable when you're in downtrend, midnight open, London section low, and market pull back into the zone. You define the trend and get involved when it's 10 o'clock a.m. You look for breaker plus FVG. That's what we'll be doing every day. Okay, now this is another scenario that is difficult. I want to clear it now. It will not happen all time showing you straight entry like when market gives you clear breakout and FVG, you enter at the FVG or you enter at the high of the London recent high. Sometimes market may decide to develop another price action. You may see this type of formation. Price action created this type of structure. We started seeing highs and lows. So when you see this type of formation, when we're entering 10 o'clock a.m. New York time, that's the New York Q zone, and price keeps showing you highs and low, mini highs and low, or you may be two, but it can never print such because of time. Let's this example. This is where you need to see a market structure shift. But making sense. Market is still an uptrend, but this price action shows you that sellers are stepping in. All you have to do here is to use this. That's where you see swing failure or market structure shift. So swing failure is when you have double sweep pattern. Market failed to take this low again and do what? And push out. You get involved this high. This is where you get involved. Get involved here, then target your 1:2. But your stop loss be somewhere around this London low, London recent low, and you target your 1:2. But if market doesn't give you double sweep pattern, all you will wait for is market structure shift. When you have breakdown and another high, take up this, and this is where you get involved. You get involved in make sure you have breakouts plus FVG, that is breakout plus FVG, and what next? You do what? Or you use this high, this breaker as your entry, targets 1:2. Then you go long from this spot, so your 1:2, set your stop loss below this. I hope this is clear. Then when we move into live example, you will understand this better. So let's go there. Okay, friend, this is the first example, and you know what? I know my policy here. I don't give much. You need to pay very good attention. Today, this example is from Wednesday, 8th October, 2025, recent example. And this is the opening of the day, which is the Asian range. So we wait patiently for London section to comment for we to define our trend. Now, we need to mark the time zone where we get involved. The time where we get involved is 10 o'clock a.m., right? 10 o'clock a.m. to 11 o'clock a.m. So this is 11 o'clock here, 11 o'clock, and this is 10 o'clock a.m. This is where we get involved. Hope I'm making sense. So we need to wait all this time. I see that you need to have patience for price to reach this very time, which is New York time. So let's fast forward everything. So to help me mark my recent highs and the previous daily and open, I need to pick out indicator called price mid range. Go to your indicator, see that. Then this is the highest point of the day. This is where the market opens. So Remember what we're doing here, we're trying to define the trend. Now, London section is on. This is the opening of London section, which is 3 o'clock a.m. New York time. So, London section is where we define the trend. Before we go into continuation, what are we seeing? Market was still in downtrend. Now we are in New York. New York section is on now. New York section is on. Remember, market is still in downtrend because this is the opening of the day. Price haven't get above it. Now we are in New York chill zone. How do we attend to this trend? Because what is our trend? Market is in downtrend. Don't get confused here. Look at it. This is the opening of the day. This is the opening of the day. And price failed to get above it. After this London section move, nothing happens. And if you put in your price action, so let me take this out. If you put in your price action, we say that market shows double or take out this low because this is a valid low and this is called a market structure shift. I'm doing this for your better understanding, but our guide is all this liquidity size or previous daily high, previous daily low, recent open, New York, London section high, London section low. So all these things are where our interest will be, but I'm trying to make it simple to tell you that the price is still in downtrend. This very London low, that's the lowest point of London time. Let's see what will happen. As you can see, price have taken it out. All we have to do now is to set our target because market have taken up this. The only place we have minimal FVG is here. That this is the breaker we have. So we need to use this place as our entry point because market is in downtrend. We're looking for continuation in New York. So we have to target this very zone. So we go short, set our pending order here. You need to be aggressive because everything happening here is super quick and fast. So if you can't make decision within 2 to 5, 6 minutes of your time, I don't think you can make it with this strategy. So what is it now? This is 1:2.19, which accommodate our spread. So let's see what happened. Beautiful. Market have tapped into this breakout plus FVG. Let's see if you win this trade. Remember, it happens inside this not slightly out, but it happens inside the London, New York section Q zone. So let's see what happened. Boom, the trade is won. So that's how to do it. So this 1:2. For you to get involved, you need to have a guide. Am I going for 1:2 or 1:3? That's what you normally tell yourself because some of you don't have guide. All you do is that you get greed. At the end of the day, you give back the profits to the market, which is not supposed to be. So after this, I'm done for the day because I've made my 2%. That's what I do every day. Your work is to identify the best opportunity. You see how we do it here. So that's how I do it every day. For past 2 months, I've been using this and making consistent profit. So if you want to use this strategy, make sure you back this as much as you can. Don't just rely on the information that I give here. So let me give you another example before I'll close this video. Sorry. So let's trade on Thursday. So this is opening of London, and here is 10 o'clock a.m. to 11 o'clock a.m. where we get involved. So from this time, from this space, from this distance to this distance, we are trying to figure out the direction and we get involved here. Hope it's clear. So let's move into 5 minutes time frame where we see everything super quick and fast. So let's know the direction of the trend. Remember, this is the highest point of the day, the opening of the day. This is the opening of the day. So candle to see. Beautiful. I like this. I like this. Pay very good attention. Pay very, very good attention. Most of you, we get confused here saying that price have changed structure. Not yet. So some of you call it break of structure, but this is not what I use to identify if the market have changed direction, because this is the opening of the day. This is daily candle. This is opening of the day, and the price move into that, which is London section. Let's see if we have low and high in that London section before we can say that this is uptrend after breaking this opening of the day. So let's see what will happen. Pay very good attention. If price have come back inside this range, you can see big volumes is coming in as New York section open. So this is the opening of New York section. This, what happens here is called sweep. Understand? You put it this way because this is double sweep pattern. This high here, high and low, this is recent highs and low we have, has been taken out by this candle, and this is a market structure shift. So let's see what will happen as we approach New York section, where we get involved at 10 o'clock to 11 o'clock a.m. Beautiful, beautiful. So now I have recent high. This is the recent high, and this is recent low. Where do I get involved? Let me see what will happen, because price have taken this recent low. Price have taken this, is we shift from here to here. So now let's see if we have a break and retest. We have no break yet. Beautiful. So where do we get involved now? We need to use this breaker plus FVG. So I'm getting involved here because the continuation of the entrance, so this is short position. We get involved. Our stop will be here. There we target 1:2. Let's see. Take that trade. Is our order peaked? Not yet. Our order is not peaked yet. Boom. Unfortunately, it didn't pick our order and move. So that's how it is what it is. So don't get angry when you miss a trade. It do normally happens. Follow the rules. Do this every day and thank me later. Pass your challenge with this. Don't use what you don't understand. Don't trade what I teach you. Practice what I teach you before you trade. I always said it. That's the reason I'm not giving a bunch of examples, because I know if I give more example now, I'll give you confidence to throw it into your live account or challenge you just bought and mess yourself up. So you need to backtest, practice for you to understand it better. That is the best way for you to grow in trading. So if you think this is helpful, and if you think you love this, and if you think I've helped you in one way or the other from good, big, simple, straightforward strategy I've been showing this channel, don't forget to like this video. Don't forget to share with your friend. Don't forget to comment. If you're confused, comment below. Tell me what you don't understand. I will still take my time to break it more down for you guys. So thanks for watching. See you guys in my next video. Bye for now.